Okay guys, welcome to the channel. This is the first video. These videos are going to be a lot more in depth, sort of specific trade recaps that I'm going to talk about the whole week as a whole on the weekend. So it is now Sunday, 23rd. I'm going to do all the trades that I took in the week that's just gone. So obviously this date would have been the week starting the 17th of November. And then we just talk about all the trades. I talk in detail about them. It's a bit of a longer video, but it's a lot more educational for any of those guys that want to listen to it. So I only took one trade this whole week. I was off from Monday to Wednesday, so I only traded Thursday and Friday, and only took one trade on Friday. So this is going to be a much shorter video than normal. But anyway, let's get straight into it. So obviously, New York Open, 9:30 a.m. We just chop around, not really anything. Few fair value gaps, nice inverse here. I wasn't interested though. We had news on this candle, 9:45, and there was an inverse here, but I already got swept, so no entry there for me. And then this was the first real setup that presented itself. So we have two 1 minutes stacked on top of each other, and it's also a 2 minute fair value gap. So we obviously play off the 2 minute, but the 2 and the 1 minutes inversed at the same time, which is just perfect, makes my life easier. We sweep liquidity here, and we have a nice SMT with ES, as you can see. An SMT, all that is you have a corresponding pair, so NASDAQ and ES are corresponding pairs, and if on NASDAQ we take the low of a swing low, and on ES we do not take the low, then that is an SMT created, and basically that means that a position going in the opposite direction is more likely to work. So we have an SMT on the downside, a position upwards is more likely. If we had an SMT on the upside, a position to the downside is a lot more likely to happen. We also, in this huge 5 minute fair value gap, we tinily tapped into it. I don't even know. We just tapped into it here, but then we tapped into it a lot more here. So it's still valid, of course. So we're reacting out of that. Very nice reaction. But yeah, obviously very insane displacement. We displaced about 12 points above the fair value gap, which is great to see. And yeah, in terms of bias, the daily and 4 hour were a bit more bearish. However, the 1 hour was bullish. And from that, I was sort of just seeing whatever setups came, I would have taken them. There wasn't a clear bias for me. I had some people saying they were very bullish. Some people say they're very bearish, but I was a bit more neutral. So that's why I took a long here. So yeah, this is a pretty good setup in my opinion. So normally you would have a break-even point at a significant point, like a swing high or an unmitigated fair value gap or whatever. In this circumstance, I have it at this random point. Why, you might ask? So obviously I trade 1-to-1 risk to reward. Now, literally what that means is I have a 1-to-1 set, and basically as soon as price taps the 1-to-1, I'm going to trail my stop loss to that point. I don't actually use a take profit point. So, I enter here, and then price goes up, comes to my 1-to-1, I trail my stop to the 1-to-1, and then if price continues to go up and up and up and up, then boom, I've grabbed my 1-to-1, and then I'm just going to continue to slowly trail. If price hits this, I trail, and then it comes down, I've obviously locked in the 1-to-1. The reason I do this is because I back tested through all of my previous trades over months and months, and I noticed that a lot of my trades that hit only break even, they hit a 1-to-1. But they didn't hit, a 1-to-1.5 or a 1-to-2 or 1-to-3, whatever, liquidity points. Like, for example, this high and this high. What I would normally target is probably this high and then this high, maybe for like 20% of my thing, and then maybe leave some runners, right? But I noticed that in a lot of positions, they never ended up coming and taking these liquidity points. They would just come up, tap a break-even point, and then just come straight back down. So far, and I know I will be in the future, I'm a lot more profitable by just using the 1-to-1 strategy. It may seem like it's a silly strat and you're just cutting your losses and you're just, earning way less, but trust me, play it out or just look back at your own trades, and it's a serious idea. So that's my strat. So the reason I did my break-even point here is because this point is practically a 1-to-1 for me. So it would be silly to do my break even here because I'll literally go break even and then trail my stop instantly at the same time. So I could do that, but because it's a huge range, I'd rather just have my break even, a little bit lower just to secure my my loss, you know, to make sure I don't lose, because obviously I want to protect my capital at all times. So a little bit less risk because I'm being more protected, but it's safer at the end of the day. So of course we enter on the candle close entry here. My stop loss is a few points. I usually do about 5 points below the fair value gap. It's not hard stop loss. It's basically I wait for a candle close below the fair value gap. So if price came down and wicked here, I would still be in the trade, even if price came down to hit. Okay. However, if we got a candle close around here, I would then manually just X out of the position. So yeah. So boom, enter on the candle close, play price out. We have a very strong bullish candle. Okay, this is a very good code, good sign. So here I'm break even. Stop loss is now at this point. I now cannot lose, you know, break even. And then obviously I'm waiting for the 1-to-1 to get hit. But then unfortunately, we just come down very strong. I got exited out here, of course. However, if you were waiting for your break even to be at this high, you would still be in. And this is why I'm very glad that I didn't do that, because you would definitely be out of the trade by now. You know, candle close below the fair value gap, you would have exited around here. But yeah, so I just personally think it's a bit silly to do your break even up here because it's such a huge range to go to. You know, you've got almost 45 points until you're at break even. You know, like fair enough for a liquidity target, you know, take profit point, but not break even. So yeah, obviously we were very correlated on the ES. This was a very nice trade. We just heavily reacted out of this fair value gap very badly and came down to the downside. But yeah, just break even for me. And yeah, literally that's the video done. I only took one trade this week, as I said. I was off for 3 days. But yeah, so every week I'm going to be doing, so I'm going to post every short. I'm going to be posting every trade on my shorts for my YouTube. And I've also got a TikTok and Instagram account. I'll be posting them too as well. So be sure to check those out. But every weekend I will try to do a full recap of all the trades I've taken the previous week in detail, like I have done here. So let me know if you guys are interested in that, and if you want any other content, you know, maybe some learning content or just me describing what I'm doing, you know, more in detail of certain practices or whatever. But yeah, like, comment and subscribe, and I'll see you guys in the next video. Cheers.